In this video, guys, we're going to look at the pipe top and pipe bottom, one for you swing traders and investors. Stay tuned. Hey traders, a very warm welcome to you. Okay, so a pipe bottom or a pipe top is to be used on a weekly chart. It works okay on a daily, but a weekly chart is where it's at. So it's really for you kind of long-term swing traders, investors, guys who are holding positions for multiple weeks, multiple months, or even longer. Okay, not for day traders out there. This is one of those ones for the longer term guys. Okay, so what are we looking for? We are looking for a push up that is if we look for a pipe top, for example, let's start with the pipe top and we'll go for the pipe bottom in a second. A push up, nice green candle. We might get a little bit of a wick on there, it doesn't matter so much. The point is we've got a long body that's denoting that a week has kind of been a decent supply demand imbalance in one direction. In other words, we've got a lot of demand coming in and we printed a green candle on the week. Then the next week we have the opposite and we have a red candle that kind of gives us that potential pipes look. Okay, so one green, one red. The point of this is that the market should have driven up to that. We don't want to see this in no man's land. We don't want to see it in the middle of a range. We don't want to see it anywhere really. You want to see it at highs. We want to see it at sort of pullback highs. We want to see it at levels of interest. And the theory behind this, if you haven't got grasped it already, is that, hey, week one, good bullish strength coming in. Everyone's happy. We're pushing to highs. Week two, we reverse. We undo all that's done in week one, and it potentially is signifying a change in sentiment, an opportunity for us, if we're in a pipe top, to get short on the close of that week. If we're a pipe bottom, it's purely the other way around, and it's going to be a red first and then a green because it's going to be coming off the low. Reds come into the low, then we see that green reversal, giving those distinctive pipe shapes, and we're going to go long for a counter trend move. So this is one that can really grab those big trending moves. So the structure of this is, hey, at the end of the week we're going to go short if we're on a pipe top, and we're going to have a stop above that high. As it's a swing trade, as it's weekly, we're not going to be inundated with signals, so we need to give ourselves a little bit of room. You need to be above that high, not too tight as as we normally like to say. Don't want to be too tight there. Want to be a little bit of room so that it's got room to breathe. Maybe it takes a few weeks for it to kind of roll down. Who knows? Remember, this is a longer time frame. We've got to be patient with this one. It's going to take time to roll. Of course, that's going to be a wider stop. Adjust your position size to suit your monetary risk. And then the idea is it's counter trend move. We've got a good example here on gold for you guys. A weekly chart gold. We've had a kind of downtrend move here. We've got a counter trend move here. We get our pipe on a weekly, so you can see we've kind of driven up a really decent kind of drive over the final part of that year and kind of multiple weeks. That's a long move. Then we get the counter trend move against it in the second week, giving us that pipe shape as we can see there. And there's our short entry. Our stop's going to be here, and this thing kind of rolls, messes around a little bit, gives a little bit of problem, but ultimately, it's a $300 trade, and we're prepared to sit through pullbacks because this is a longer term setup. Look at cable here on a weekly chart again, pipe bottom, good push down from the 2 level, whenever this was, 2008 probably, is it? Yes, it is 2008. Good drive lower, very, very strong, and then we get this final candle that really pushes to lows, and that's another good thing to point out, guys, actually, is that as we push to fresh territory, that signals that it's potentially a better trade as well. Fresh territory. Then the next week we get the green, we get the reversal, so we're long on the close of that week. Our stop is under here. Here we get a little bit of threatening, but the point is the stop doesn't get triggered, so it doesn't matter. And then we're in that for a decent counter trend move over kind of the second part of the year, or the middle part of the year. Everyone look at it up to 1.7, so a decent kind of run off that, and I actually picked the bottom of that move. Final, another one of currency traders, Euro-US dollar weekly chart again. As I say, it works well on a weekly. We're coming up to a bit of a resistance level, and we get the pipe kind of signal. This is a different one. It's a slightly different. Actually, I quite like this one. And ultimately, guys, you know that we never ever see textbooks, or very rarely, especially in a weekly. You'll be waiting forever to see textbook, and this is even nicer in my eyes, because if we zoom in on this even better, even more, let's analyze these actual 2 candles. So here's the pipe, here's the uptrend to fresh highs after a good rally. We take out the high on week 2, then we reverse and we close really, really well under the low. So we've kind of almost engulfed, it's not quite an engulfing, but we almost engulf the range of the week and close lower. So, you know, going by the standard rules of this trade, we're going to be going short here, or closing our longs if we're long, and if we're short, we're going to have our stop above here, and then we're going to see where that takes us. And pretty decent trade on that. That's giving us a kind of nice multiple year move, or year worth of move, almost back to low. So you went from kind of 150, what was our entry on this, 143.17, 1.4317, went down to kind of 1.2, 1.22, around that level, whatever your exit strategy is going to be. Maybe you could wait for another pipe, or maybe you use a longer term thesis for whatever kind of idea you've got, trade idea you've got. So a good one, this guys, for weekly traders. Like I say, it doesn't happen very often, but when it does, it's worth paying attention to, because its supply demand has shifted. It's right at the end of a move. You get the stretch, then the second week undoes all the first week's move, gives us that pipe, which is kind of in fresh air territory, like it is on this euro trade, like it is on this pound trade to the downside, and like it also is on this gold trade. A little bit different than gold trade because it's back in territory it was in kind of several months ago, but it's still fresh territory in terms of the drive up. It's still kind of poking its head up above the high, if that makes sense, or poking its head below the low. Get the pipe trade, get the pipe set up, you're going short and then looking for it to roll down. So nice little trade, that good quantified risk, decent risk reward ratio, one to look out for you swing guys and girls and investors. See you in the next one, take care, bye bye.